Good morning. My name is Ashley Sweet, and I'm with Maybaum Real Estate. And today I have the pleasure of speaking with David Perry, who is with Augusta Mortgage. Good morning, David. How are you?
Good morning, Ashley. It's good to talk to you.
Good. Thank you so much for coming on our Zoom meeting.
Sure.
And I'm excited to have you, and I know the public will be excited to learn some information today. There's a lot of things going on in lending and mortgage, and it seems to change every day. The market is hot, inventory is low, as we've been hearing, but people are still kind of doing their own reconnaissance and trying to get everything in line so that they are comfortable when they're ready to press the green button. So I'd love for you to kind of talk to what people can do before they go out and look at homes, before they're ready to buy. What do they need to do to get their own home in order?
Well, it's definitely something that we can walk you through at Augusta Mortgage Company. We can help you the whole way. We do everything we can to make it as easy as possible to do your mortgage and get the financing for your new home. But there are things that you can do ahead of time that make the process even easier. So we'll help you no matter what. But if there are a few things that you can do, if you want to go ahead and get a head start to really make the process even better and even easier. So I kind of jotted down 5 things that you can do ahead of time. And this would probably be, I would say, maybe a month, 2 months before you apply for a mortgage. Okay, and we'll get into at the end here what applying for a mortgage actually means. Okay, so one of the first things that you can do that will help you is check your credit score. Okay, so get an idea of what your credit score is. There's lots of services out there that give you an opportunity to get your credit score for free. So Credit Karma does this. Mint is a service that I use. If you have a Discover card, they will tell you what your credit score is. They'll give you a ballpark. Now, this credit score they give you isn't the exact same one that we use. It's not your FICO score, but it will give you an idea of where you're at and let you know if you need to start working on repairing your credit. Okay. So for our purposes, what you need to know when it comes to applying for a mortgage, if you have a 740 score or above, you're perfect.
Okay.
If you have at least a 680, you're going to be fine. There are some hits to your rate as you get lower on the credit score range. If you're under 640, you really need to probably concentrate on repairing your credit. And there are some things that you can do fairly quickly to change your credit score. One of those things you can do is if you have collections on your credit report, you can pay those. And a lot of times if you negotiate with the collector, they'll not report those anymore. That will help your credit score. Also, if you have a revolving account, that's a credit card, keep your balances low on those. If you have a high balance on a revolving account, it's going to negatively affect your credit. So if you keep that balance low, it's okay to have a balance as far as your credit score goes, but keep it low.
What is low? What does that mean? Like
you want your balance to be about 30% of your credit limit. So if you have a credit card, say, with a $1,000 credit limit, you want your balance on that card to be $300 or less. If you keep it there, if you keep it in that range, it will, every month when it reports, it will give you a positive bump. It'll basically give you positive credit for your score, and that will help your score go up. So keep it at 30% of your limit or less.
But you would encourage people, if they can, pay it off at this time.
Well, we'll come to that in just a second. It really depends. If you have a low score and you need something to help you boost that, one easy way to do that is by keeping your revolving accounts with a low balance. So paying those off is good in some ways, but if you want it to positively report to your credit, then it's better actually to have a low balance on it.
Okay, that's interesting. Thank you.
But that does lead me to my second thing that you can do ahead of time to help you before you apply for a mortgage, which is pay debts. So one of the things we look at as we do your mortgage is your debt to income ratio. And that's the amount of liabilities you have compared to your income. If you have some debts that have high monthly payments, that can really affect your debt to income to the point where it limits what you can purchase as far as your home. So if you have those accounts that have a high monthly payment, you might want to consider paying those off to give you some room in your debt to income ratio. And also, don't do deferrals. If you have an account, a credit card, something like that, don't do a deferral. A deferral for you should be a last resort. Okay. And that can negatively affect you when it comes time to do your mortgage. I've seen it happen.
And deferral for layman means, I'm not going to pay this now. I'm going to pay it in 90 days. Or if you've lost your job or things like that. Is that what the deferral is referring to?
Yeah. So I had a case of somebody who didn't lose their job. They're doing fine, but their credit card company offered them a deferral. He didn't need it, but he thought, hey, why not? I may as well take it. And it messed up his debt to income so bad, because when we see an account that has a 0 minimum monthly payment, we have to assign a monthly payment to that, and it's 5%.
I see.
So if you have a big balance on that, if it's $20,000, 5% is $1,000. You just gave yourself a $1,000 monthly liability, as far as we're concerned, and that can skew your debt to income to the point where it will mess you up. So
okay, so it sounds good, but don't do it.
Don't do it unless you absolutely have to. A deferral should be seen as a absolutely last resort.
Got it.
Okay. So the third thing that you can do ahead of time to when you're preparing to do a mortgage is save money. This goes hand in hand a little bit with paying debts, because if you pay off a debt and you don't owe that money anymore, you can now save that money. Money that you save can be used towards your down payment. It can be used towards your closing costs. The more money you have in the bank, the better your process will be. It'll be much easier for you, Ashley, as an agent when you're preparing an offer. If a buyer has more money in their account, that enables you to make a better offer, because you don't have to ask for as much money towards closing and things like that. So you're more likely to get your offers accepted. So that's a good thing to do. If you can save a bunch of money, save that money.
So protect yourself to leverage in this very insane market so that you are competitive.
Yeah, because if
squirreling away money. Okay.
Right. So if a seller gets 2 offers and one person is asking for $6,000 towards closing, and the other person isn't asking the seller to contribute any towards closing, and other than that the offers are similar, the seller is going to take the offer where they don't have to contribute any towards closing. So if you can do that, that helps you.
Okay. Good advice.
One other thing you can do, and this is not a necessity, but this is something that would help you in the process when you're doing your mortgage, is to get all your money into one account. This is a little tricky, because a lot of us have savings account, checking account, we have retirement accounts, different things like that. But if you plan well enough, a couple of months in advance, take all the money you're going to use on your mortgage, your down payment, your closing costs, and put it into one account. You want to do that at least 2 months ahead of time. That way, when you give your information to your mortgage originator, you just have to give them bank statements from one account. Okay. Instead of having your money spread out where you have checking accounts and savings accounts and all these things, and you have to get them statements from everything, you can give them one statement, and that'll cover everything that you need. That makes the paperwork easier. You want that money to be in the account for at least 2 months. You want to season the account with that, because we have to, as a loan originator, I have to see where the money comes from if it's new money. In other words, if I see a big deposit in your account and it's only a month old, I've got to find out where that came from legally. So if you put it in there months in advance, it's there, it's seasoned. You don't have to check it, and then it makes the process much easier. Less paperwork is good for everybody. Okay,
so a checking account and or a saving account, but put the lion's share of the dollars in one account just for this application period to streamline. Is that what
I would
I'm?
say absolutely. I would say if you're a real planner, if you love planning ahead,
Yes.
then several, yeah. So several months before you buy a house, open an account. It's going to be your mortgage account, but all the money you're going to need, all your down payment, everything you
Okay.
have saved up for your house into that account. Just let it sit there for a couple months, and you're ready.
Don't touch it. Don't shop on Amazon. Just leave it.
Nope.
Okay.
Yep.
Good.
And the last thing I would say, number 5, the last thing to do before you apply for a mortgage is to pre-qualify.
Okay. What does that mean?
So, and this is something that some people might confuse pre-qualifying with an application. Pre-qualifying is not a mortgage application because one of the ingredients of a mortgage application involves an address. We have to have an address for the property.
Mm.
Pre-qualifying happens before you find the house. Okay. So what you want to do is contact a mortgage loan originator, get referrals from your friends, from agents that you know, and pre-qualify. That your mortgage loan originator will ask for a few documents, your bank statements, your pay stubs, those kinds of things. They will sort of almost start the process of originating your mortgage, like the very first step. They'll kind of get that paperwork in order, and they'll give you the thumbs up. Let you know you can afford this much house. You can make the payments. You have the debt to income headroom there. You have the cash flow. You have the money in the bank you need. They'll check all your stuff that you've been preparing all these months, and then you'll be pre-qualified. Then, Ashley, when you take somebody to go look at a house, you know that when they make an offer, that it's backed up and they're going to be able to get the financing for it.
Right. So we're staying within a range. We're not, if the clients or buyers get the home, you're not going to be cash poor and live in a home with no furniture, and you can live comfortably within that range. Okay. So that's good advice too. Thank you.
Absolutely. So you do those 5 things, and it's going to be a very smooth transaction. It'll be great for Ashley. It'll be great for your loan originator. It'll be great for you. Because as many things as you can take care of ahead of time, the smoother the process will be.
Perfect. And David, you're at Augusta Mortgage, and do you do meetings with people online? Can you meet with them in person? What's the best way for someone to come in and inquire and get in touch with you? And I'll link it in the comments here.
That's great. I can do all those things. I can meet in person. I don't mind doing Zoom calls or FaceTime calls if necessary. You can call me, email me. But my phone number is 706-513-9199. It's my cell phone. And folks can call me, text me anytime they need to. We could set up a meeting. We just talk about your situation. I work with people that are just about to make an offer on a house, or people who are thinking maybe in the next 6 months I'll buy.
Good.
Anywhere in that range. And we can get you set up with the process. Even if you're not ready right away, we can get you started and get you looking in that direction.
Super. And I'm licensed in Georgia and South Carolina. Can you serve people across the river?
I can, yes. I'm also licensed in Georgia and South Carolina. Loan originators with companies like Augusta Mortgage we have to get education and take national tests and things like that and get certified. And I have those certifications for Georgia and South Carolina. Yes, ma'am.
Okay, great. Well, thank you so much, David. It was wonderful to talk to you today and kind of demystify the process, so it's not so daunting going into it. Money is always an issue, but it's nice to know you can break it down into small bits and meet your goals and your dreams.
Definitely.
Well, thank you for your time, and we will have this online. I'll put your contact information, and you take care in the meantime.
Thanks, Ashley.
Thank you. All right. Thank you so much, David. I got the recording.
Great. Do you want me to send you those points?